Hi everyone. Do you know what a debit memo in Oracle Payables actually is? What is a debit memo? A debit memo is created when you need to reduce the balance payable to a supplier. It's usually created for purchase returns, overbilling by a supplier, incorrect charges on an invoice. So basically, it is a negative invoice that is created to reduce the invoice amount. For example, you have received goods worth 1 lakh rupees, but returned items worth 10,000. Maybe because of damage or maybe because you have received some incorrect product. So you create a debit memo of 10,000 to reduce your liability to 90,000. Means actual invoice is of 1 lakh while the debit memo is of 10,000. So the 10,000 will reduce the invoice amount to 90,000. So let's quickly see the navigation. Go to Payables, Invoices, click on the task list, click on Create Invoice. In the previous video, we have seen how to create a standard invoice. Now we are creating a debit memo. Let's see what the difference is, how we create a debit memo now. So if you remember in the previous invoice, in the standard invoice, we have selected the invoice type as standard. Here, the most important thing here in the type, we'll select as debit memo because this is a debit memo. Let's select our business unit, select the correct business unit for your legal entity, select the supplier. You have to select the same supplier for original invoice. Okay, so let's select our supplier. Automatically, when you select the supplier site, supplier number will automatically populate. Legal entity has also come up automatically. So, can someone tell me why after selecting the supplier site and legal entity are automatically populating for this business unit? Put it in the comment section. Now, let me put 10,000. Okay. So here I have made a small, mistake, I would say, an intentional mistake. What do you think it is? Let's select if there is any distribution set. Okay, let me put it as debit memo 1. This is the invoice number that we are supposed to give. So you must enter a negative number because this is a debit memo which is reducing the supplier's liability. We need to put a negative sign before it. Okay, that's the difference between the standard invoice and debit memo. So it is not validated. Let's validate the invoice. So after saving, click on validate, then do accounting for the same invoice. If there are any taxes that we'll see now, we'll adjust the amount. So there are no taxes for this. So it is validated. We can now do post to ledger. Click on post to ledger. Once it gets posted, we can also see the accounting. So can anyone come up with an accounting entries? So it is the accounting entry for a debit memo would be liability debit, and expense credit, item expense credit. So this entry will actually reduce the liability to the supplier. Okay. If there are any approvals, we also need to approve it. Now that there is no approval, we have actually, we can go ahead, save it and close. So this action isn't applicable for the invoice in the current state. All right. So save and close. So debit memo is actually not paid. Instead, it is adjusted against future invoices from the same supplier. So the supplier's outstanding balance gets reduced. So let's make a quick summary. Debit memo basically reduces the supplier payable amount used for purchase returns or overcharges. First, we need to save, validate, account it, and adjust it against the future invoices. Okay. Thank you, everyone.